YouTube, how to invest $1,000 for beginners. Now, this is the stock version. So, thank you guys for tuning in to the Life Changing Finances YouTube channel. Make sure you guys like, share, and subscribe. So, you can see we've got account number one. So, we have two accounts, all right, that you want to have for your investing $1,000. So, account number one is going to be your long-term wealth building account. So with this particular account, you just keep putting money in there, keep investing, and you just don't touch it, right? Account number two is going to be your swing or day trade account. Okay, so you can learn how to do both or either one. This is going to come as a valuable skill to help you raise capital to put into your wealth building account. Okay. Now let's explain everything. Now, for account number one, with $400, I would allocate this towards a VOO, SPY, or SPLG. Now, what are those? These are ETFs that follow the S&P 500, which are the top 500 companies. Okay. Now, currently, I use SPLG because it's more of an incentive right now for me to use them. It's cheaper. You get a little bit more bang for your buck. So that's why I've been using SPLG. Now, I want you to do your research on all of them. Now, SPY is more so what traders use who like the day trade, swing trade. Now, there are a lot of people that still invest in this long term, but typically when you hear SPY, you're going to see people that trade. Okay. Now, here are two additional ones. Now, the first one is VTI, okay, which is a basket of the overall markets, right? So, for example, if you think about the Dow, the Nasdaq, the S&P 500, and more lumped into one ETF. This is VTI. Now, VT is an international ETF that tracks the world, right? So if you're wanting to not be specific to just the USA and you want to be more diversified, let's say if America is having a terrible year, the other countries are having a good year, you're more diversified. So this is kind of like a bonus, but VTI and VOO are the two that you probably typically hear more. So VTI and VOO. Okay, so you can do your research on those. Then I would have $300 going to QQQ, okay, which is tech heavy and it's more diversified than something like a VGT. Okay, so the Qs will be heavily weighted in tech, but then you got healthcare, you got communication, you got some other sectors in there as well. So it's more diversified. VGT is going to be more specific to tech. Okay, so I believe VGT is 99% tied towards tech. So let me just double check that one because I invest in this one too. Yeah, this one is 99.3% technology, 0.3% industrials, 0.24 financials, zero point 0.1 communications. It's basically all tech. Okay, so this is as heavy weighted as you can get with a tech ETF. Okay, so I would do something like these, one of these two, depending on if you're all in on tech or if you want a little bit more diversification. You can go with the Qs, or you can do something similar to them. Okay, now all of these are pretty easy to research and find. Now, $200 I will put towards individual stocks. So this means that I'm willing to be a little bit more risky. And as a beginner, I would stick to your solid blue chip stocks like Apple and Microsoft. Okay, so these two have been around. They've got a huge track record, and we know that they aren't going anywhere. Now, Nvidia is a little bit newer, being in the top five biggest market caps. I think they're number three right now. But Nvidia, you guys don't know, They're a chip maker, heavily involved in the AI space. Do your research if you don't know it. I'm sorry, Nvidia. I said it wrong. Not Nvidia. It's Nvidia. Here I go again with that. So Nvidia. Okay. So this is one of the hottest stocks of the year. For something like this, I, I mean, it's a lot more volatile than Apple and Microsoft. These two usually don't move as much as a Nvidia would. So I would probably stick to these two as a beginner. Okay. But if you want to be a little bit more risky, maybe you could try something like this. If you want to be even more risky, maybe try something like a Tesla. Okay. So I would distribute $200 between probably 2 to 3 stocks on my individual. Now, if I were a beginner, I would wait until the market or a stock that I want to buy falls 10 to 20% from its high before getting into it. Okay. Now, there will be plenty of opportunities. We've been seeing them, over the last couple of weeks, especially when you're, in these earning seasons or, we're in a space now where inflation is high. So every time there's economic data, the market and the stocks move. So keep that in mind. Now, if you're a person like me when I started and you're anxious, right? So if you have to get started uh, right now and you're anxious, you want to go ahead and get in there, then you can start to dollar cost average, okay? So maybe, you set it up to where you put $5 a day, into your stocks and ETFs up here, okay? So that's what I would do with account number one, to get myself going. Now, account number two would be my day trade swing trade account, and I would use $100 to learn how to trade. Now, this is going to take you some time. Some people are going to be more disciplined than others. Some people is going to click quicker than others. Some people are um, what's the word I'm looking for? Stubborn, right? Some people will keep doing the same thing 5, 6, 7 years, and eventually they'll say, you know what? I know it works. Let me just stick to that. Now you're still going to have moments where you lose a little bit. Once you become seasoned, because everybody makes mistakes, but it's what you do with those mistakes, and as you go forward. Okay, now, I would maybe start with something like a SPY or a QQQ ETF to learn how to trade, because I just think it's safer that way. For example, let's say you got into to Google, right? And you didn't know that tomorrow was earnings, and then you come into your account, let's say you did a call option, and Google stock went down and then you lost, right? You lost some money. In that particular case, a stop loss will help you, but it's just it's just safer to just go with the ETF. Okay. Not only that, sometimes if you do a call or a put, let's say you do a put, right? And the stock goes down, even if you come in the next day, you can still lose money because the value of that contract can change. Although the stock is coming down, like it's weird stuff that'll happen when you're investing directly into a stock. So I would stick to learning how to trade SPY or QQQ. I will learn how to use a stop loss. This is going to be your best friend. Okay, this is going to be the most important thing you can learn. Okay, now I have a video in my on my YouTube channel about using the stop loss in Robinhood. Check that video out. So you want to use a stop loss. So for example, if I have $100, right, the most, let's say, I would be willing to lose on a trade would be $5 to $10. So that's 5 to 10%. And then I can live to see another day as it pertains to trading. Versus if you don't lose a stop loss, you go to the bathroom and you come back and you're down 50%. You know what I mean? Like things can happen that quickly. So use your stop losses, learn how to use your stop loss, And again, I would practice with SPY and the QQQ until you start to understand. Um, Another thing I would say is do not take your money from your long term account and put it in your swing or day trading account to try to win your money back. Mm-mm. I would recommend go Uber, sell some things. I would not take money out of my long term account under any circumstance to fund my account number two. I just wouldn't do it. It needs to be in reverse. You want to start to get your wins and then put it to your account number one from account number two. Okay, so you want to get into that habit. So what else would I add to this? I would start trading I would start with trading the stock outright. So for example, I would practice buying a stock as it bounces off of support. Okay. Even with $100, you can buy fractional shares of SPY and QQQ until you get in a good rhythm. Now another thing you could do, I'm gonna type it here, is if you don't want to practice with your own money, you can do what they call paper trading. Okay. And you can do that on the brokerage Webull. I want to say you can do this on Moomoo too. Okay. So I will look into these two brokerages if you want to learn how to trade or practice trading before you actually use your actual money. So again, you can use Webull and Moomoo. They have paper trading, essentially meaning you are practicing your trades as the market is actually open. Okay, so that's another thing you can do. All right, guys. So that's how I would invest $1,000 if I was a beginner. And this is a stock version. Um, Let me know how you would invest if you're more on the advanced side of things. I'm be interested to know how you guys would invest that. For you beginners out there, if you have any questions, let me know. Or maybe you can recommend another kind of video. Listen, guys, I appreciate you guys. Make sure you guys like, share, and subscribe. And we're out, guys. Peace.